For more on where stocks are heading from here, let's welcome in Warren Pies. He's the co-founder of 314 Research. Good to see you.
Good to be here.
You downgraded equities in July.
That's correct.
Uh-oh.
Yeah, I mean, to give us a little bit of slack, we upgraded. We were overweight through it from May. Last time I was here, I was pretty bullish in May, and we went down to benchmark weight. And so we just told our clients, look, if you've been following us, then you're ahead on the year. You're beating your benchmark. We downgraded in February, re-upgraded in May. Now we're pulling back. I think tactically it makes sense. Everybody's bullish today. You've had a lot of guests, and I don't hear anything but positives.
Well, I mean, Rick Reeder, for example, he described what he thinks is an absolutely amazing investing environment.
Yeah, I heard that. Yeah, I mean, I think
that gives you pause?
Well, we measure sentiment objectively, but it does reflect what we're seeing in our objective indicators. So we see sentiment is really stretched, extreme. We want to fade that. It's a little tricky. Seasonally, we're going into a weak period of the year. And, you know, one of the things, and I talked about it last time I was here in May, that really supported the market with these systematic buyers, so vol targets, CTAs, and corporate buybacks. And we're going into this period right now where there should be a seasonal dry period for corporate buybacks. We've had some aseasonal buying at the beginning of August, and I think people are starting to jump the gun and misinterpret that as this summer melt-up that everyone wants to believe in.
If people are so bullish, and there are so many of the bulls, why is there so much cash on the sidelines?
Well, I think the cash on the sidelines honestly reflects the amount of fiscal spending that's gone on in the economy. I mean, everything. We look at checkable deposits, you look at the stock market, you look at gold, you look at Bitcoin. Every asset has increased. $100 trillion of wealth creation, the main assets that we look at. And it's really coming from the federal government running a 7% deficit every year on pro-cyclical. So I see that as a huge support to the market. We still have a $6,800 price target to the S&P at the end of the year. But I think when you're talking tactically, and I think Rick said this, is you want to lean more on technicals and systematics. In our work, I think this is an area to watch for a pause.
Well, because he talked about the technicals being great for the market.
Yeah, I mean, we had a lot of great momentum signals, and we put those out in May when we upgraded stocks and went overweight, and those are still in place. That's like a 12-month signal. But you have to recognize that trees don't grow to the sky.
Fair.
These things pause. And I think, like I said, we're going to benchmark weight. If you're a client of ours and you followed our advice, I think you want to just neutralize your overweight and let the market come to you.
No, I hear you. I'm not trying to pick on you like
not at all,
that,
no.
At all. And some suggest, look, I'd love a pullback, and I would buy it. I mean, the Fed plays a role in this conversation too, doesn't it? I mean, don't fight the Fed. They say that for a reason.
For sure.
Get more cautious and negative on the market when even, Robert Kaplan, who isn't exactly, Mr. Dove, is leaning towards a cut himself.
Yeah, and to be fair, we've been on 3 to 4 cuts all year. So, like, this is ebbed and flowed. Everyone's got, at different points in time, they're at no cuts. Bank of America, no cuts. You get the big guys. Now they're all back on cuts. That's now getting priced into the market. So what comes next? That's the big question. What comes next? And I think there is some concerns in my mind about the labor market and the growth story. And the market's kind of glossing over that, in my view.
What about areas you either want to be leaning into in the market or maybe taking some profits?
Well, I think what's relevant to today is I'm fading small caps in low quality.
Oh, you're fading this big move
This
today.
move today in small caps, I'm not a believer in it. And I think that hedge funds got over their skis using small caps as a short that they use against these large cap, high quality stocks. So that trade's probably going to have to digest a little bit.
That's almost a 3% move today.
I know, and I would, if have small cap exposure, I'd be lessening here. And if I was looking to put shorts on against my equity longs, I would be shorting the Russell here.
Oh, interesting. What about the mega caps? Because the Nasdaq's having a record high kind of day of its own.
Yeah, I mean, I think you can't fade the move in the mega caps. That's the one thing. I mean, that they're like a perpetual motion machine, and so no, I would want to be long the large cap, high quality stocks, and then short or underweight these low quality stocks.
Okay, so you'd still